Hello, everyone, and welcome back to another episode of Let's Talk Real. I'm here. Your host is Maini, and with me is Kelly. Hi, Kelly.
Hi.
We're actually side by side today, which is very exciting. Kelly came to visit here at our office. So today, our topic is going to be talking all about escrow when it comes to real estate transactions. Kelly is going to really give us a breakdown of everything that you should know and be aware of when it comes to escrow. But just as a quick recap of our last episode, Kelly, do you want to kind of give us a little summary?
Yep. So we talked about adjustable interest rates and the pros and cons on having an adjustable interest rate. And when you're choosing whether or not you want to be in a fixed or an adjustable, the key thing is how long do you plan to be in the house? Yeah. So if you're planning to be in the house short term, then an adjustable interest rate mortgage is the way to go, because with adjustables, you have a set time where your interest rate is less for so many years, and then it adjusts according to the market after that fixed rate period is up. And it could be 3, 5, 7, or 10.
Correct.
Or if you plan to stay, if you decide to stay in the house, you would just refinance out of it, because you take the risk of the interest rate going up quite a bit depending on where the market is at.
Correct.
So that's one of the main reasons for being an adjustable rate. And with a fixed rate, if you plan to be in the house long term, it might make sense to buy your rate down, because it would pay off if you bought your rate down to maybe what an adjustable interest rate mortgage is. Correct. In most times, adjustable rate mortgage interest rates are less. Right now, they're kind of level with where the market is with fixed rates.
Yeah.
So it really has to make sense.
Yeah. It would be just for specific certain people, situations, or plans, like you said, on how long they plan to be on the property for. Yeah. Okay. So thanks for the summary. So as usual, we're going to have our myth of the day, and it's related to our topic. So a lot of people think that you need to hire an attorney or an escrow company in order to purchase a home in Pennsylvania. And then that may be true in some other states, but in PA, that is not. So it is a myth. In Pennsylvania, the only thing we need is a title company, and they are going to be the ones responsible for taking care of everything when it comes to the search of the deed, preparing the deed, search for title, looking for any past liens or cloudy title that may be happening with the property. So that is all done with the title company, and also all the disbursement of funds between the parties. So between the buyer and the seller, any mortgages that may be included as well, payoffs, everything is done through the title company in Pennsylvania. Like I said, that will differ in different states. We're just talking about PA in this case. So please verify with your local realtor if you are in a different state, other than PA. Anything to add on that one, you think?
I don't think so.
Yeah.
I think you pretty much got it. I mean, you just need the title company. And title company is who holds the escrows accounts when
yes, and that's tying into today's topic. That's right. So they're the ones that, like I said, they take care of the monies, and the money seats into an escrow account. And that's what we're going to explain to you guys today, how the escrow account actually works. So let's get right into it. So I'm going to start just by giving you guys a little bit of a intro to it. So during the buying process, there's a lot of stages. Buying and selling a home, there's a lot that goes into it, from like putting an offer, inspection period, appraisal period, until you get your approval to actually purchase that home. And the escrow word is used in different meanings throughout that, and I think a lot of people get confused. I'm going to kind of give you a breakdown of what those different meanings can be. And then today we're going to talk about the actual escrow that goes into place for the transaction itself. And then Kelly's going to really give us a lot of detail in regards to that. But when we talk escrow, there is something that we explained, that when you go under contract, meaning when your offer is accepted by the seller that you're going for, the house you're going for, we say that you are now under escrow. we open your escrow process, right? So when you say under contract or under escrow, those are similar phrases that we use. And that's one way of using the escrow word. But the escrow that we're talking about today is actually an account, like almost like a physical account, where funds are going to be placed into in order to take care of your transaction from beginning to end, where the title company also has an escrow account where they disperse funds from. And we're going to break that down a little further. But I just wanted to make sure you guys understand the difference between being under escrow and then the escrow process itself and the escrow account that is used during the escrow process. So there's a lot of escrowing to it. And then there's also the escrow account that is used by the mortgage companies post-settlement to keep the funds that you need to disperse your tax payments and your insurance payments, and HOA, or most of HOAs is paid directly. But if the HOA requires to be in escrow,
Yeah, some
of them do.
Not many, but
Not
some
many.
do.
So it could be used for that too. So let's get into it then. So let's say your offer is accepted and we are under escrow or under contract. Now they're going to be opening an escrow account. Kelly, can you explain to us how that goes and what goes into it?
So usually when you're under contract, the realtor, the seller's realtor has an amount that the borrower, the buyer needs to give to hold the house. It can be $1,500 up to 10 to 15, depending on the house. And that money is what holds your spot on that house.
Yeah.
And they say we put that into escrow. And usually that money goes to the seller's agent, and they hold that there. I believe at their title company. The title company holds it.
So it depends on the situation. So the escrow money for the deposit, I shouldn't say the escrow money, the deposit money, which is also known as earnest money or just deposit, that is like you as the buyer, is your skin in the game. So it's the way for you to show to the seller that you want to buy the house and you're putting some faith money in place in order to show that you are serious about purchasing that property. And that's also the money that a buyer could stand to lose if he backs out of the deal with no contingency. And we did explain contingencies in a previous episode. So if you guys have questions on that, please let me know. But the deposit is basically going to be sent usually to the seller's agent brokerage. So the seller's agent brokerage, let's say, I'm not going to mention names, but let's say that broker is going to have an escrow account as well, where they're going to hold this deposit throughout the entire under contract or under escrow process until closing date. And then the deposit is going to then be deducted from the total that the buyer has to pay, overall closing costs. So, and then that broker from the seller's side will bring that deposit back and give it to the title company so they can deduct and disperse it accordingly. So it is held in an escrow account, but it's not the title company, not usually, unless it is determined between the buyer and the seller that the escrow monies will be, the deposit funds or earnest deposit will be held by the title company, which it can happen as well. And it's becoming more and more common, especially with some brokerages not holding earnest money deposits. So title companies usually take that, and then put it in their escrow account, which makes sense sometimes because in the end, they're the ones that are going to finalize all the disbursement of funds. So it makes it easier.
I guess it all depends on the situation.
Exactly.
But again, that money sits in escrow in that account, whether it's with the title company or
the broker
or the brokerage. But that's one terminology of the holding account / escrow account. And that's the start of the process.
Yes.
So another piece that we consider in escrow, a lot of times when you have a home inspection done on a property, there may be some things that need to be done, repaired on the home. And the title company, and sometimes they're not able to get them done prior to settlement. It may be something that's post settlement. But what the title company will do is they'll hold that money, like the the buyer may be required to give money to show, like as part of the contract, that those things need to be done, but if they're
Correct.
going to be done post
Post-settlement.
settlement. So the title company will hold those funds in an escrow account, and then they'll get dispersed once the work is completed.
Yeah.
So that's another example of the holding / escrow account.
Very common too, especially when properties are being purchased over winter time, and let's say it needs painting or something or roofing that may be challenging to do during cold
Winter.
weather, you know.
Siding or
siding.
outside work. Yep.
So that's very, very common to hold funds in escrow, that we call it, and then that's going to be held by the title company, like Kelly said, and then 2-3 months sometimes later, when the weather is actually nice, that's when they will disperse those funds to pay the contractor that they had it. But there's a process to go through that too. Like everything is on paper, it's part of the contract. Both parties have to sign on it, and the title company will not disperse those funds to the contractor until they receive proof of finalized service, you know, and then they only disperse it to the contractor directly, unless otherwise is specified, you know, between the two parties, the seller and the buyer. So yeah, it's very doable, very, very often done, especially on seasonality like wintertime services.
Yep. And the title company pretty much in most cases holds that money and disperses the money. The title company is usually the one responsible for that.
Correct.
Which brings me into my next piece of it, which is homeowners and taxes.
Mm-hmm.
So when you purchase a home, you can choose to escrow or not escrow. Most people escrow because they don't want to have to deal with paying it on their own.
Yeah.
So we're talking about if they escrow. We'll start with homeowners, and homeowners can be different with a purchase versus a refi on how much is collected. So I'll talk about a purchase first. When you purchase a home, you must pay a full year upfront of your homeowner's insurance.
Yes.
That is something that is done. It is
part of your closing costs.
Yep. It's part of the closing cost. It's always on your fee estimate. Obviously, it's an estimate until you actually meet with your agent and you get a statement with what the actual premium, the yearly premium will be.
Mm-hmm.
So you pay for that the full year upfront. And it also gets part added to your payment. So that full year premium, obviously you divide it by 12 and that's what you get your monthly payment. If you pay, sometimes some insurance companies, you only pay 9 months out of the year. So then the amount gets divided by 9 months. I think Erie does 9 months. That's why I say that. So it's not always the same depending on the insurance company.
Correct. Yeah.
So when you purchase a house, you pay the full year upfront and then it becomes part of your payment. But when you pay it at settlement, the title company is who holds that money and then disperses it out to the insurance once it's paid.
Correct. Yeah.
So that's just another example of the title company holding it. You pay, everything gets made payable to the title company, and then the title company takes care of the escrow after you settle.
Mm-hmm.
So then if you're refinancing and you're escrowing, so refinancing is just a little bit different. It would, in regards to how much is collected at settlement. Mm-hmm. So we'd have to see when the year end is and how many months are due, and that would be how much is what's due on the refinance. Because what's going to happen is you're going to refinance, say you're refinancing with a whole new mortgage company, then you're going to get all new documents. You will most likely get money refunded back.
Yes.
Because it usually cross paths in some way, shape, or form. But the title company is who takes care of that. So say your premium is end of year, like December, but you refinance in June. You've already paid 6 months of that year of your insurance, so you really only owe another six months.
Yeah.
So that's really all that's collected. And again, in most cases,
you pay up front too. So they would be overpaying if they collect the full thing. So there's an over access there.
Right. So that's why we would only collect so much. But again, once that money is sent to the insurance company, if it's the same insurance or not, most likely you're going to get a refund back because when you refinance, you actually don't make your first payment until 2 months later.
That's right.
Just the way a refinance works.
Same thing with buying a house. You never pay whatever month you close, you don't pay mortgage in the next month. You pay mortgage on the following month because the hours just keeps a month. So even if you close, let's say April 1st, your first mortgage payment will be due only in June 1st. And you actually have 2 weeks of that month to make a payment without any penalties. So technically by June 15th, that's what your first payment would be due. And same thing with refinancing.
Yeah. So, yep. So that's with your homeowner's insurance.
Mm-hmm.
And the tax escrow is the same way, except for in the state of PA, you have 2 taxes.
Mm-hmm.
So if you, on a purchase, we always collect a full year up front for escrow. But in PA, you have your municipality and county taxes, and then you also have your school taxes.
Yes.
So the municipality and state are due at the beginning of the year, and then the big one, the school taxes are September, October-ish, somewhere around that area. But again, on a purchase, we collect the full amount up front, and then that gets added to your payments, and the title company takes care of all that. So they will make sure the escrow is created and it'll get dispersed. And then once you settle, then it's the lender's responsibility to make sure that they're paying for your taxes and your insurance. It's like same thing with insurance. So
Mm-hmm.
once you settle, the title company takes care of making sure the escrows are correct and make sure it gets paid. But then it's the lender's responsibility because they continue to collect the money each month to keep it in escrow. So when it comes time to pay the taxes and insurance, they pay it for you.
Yeah.
So with a purchase, it's all taken care of at settlement. When you refinance, and we actually have a system that we use because of the 2 different times of year that taxes are due because of the 2 different types. If I were to refinance a house in June, let's just use June again, you're coming up close to when the full amount of school taxes are due. Yeah. So I would collect close to the 12 months, probably 10 or 11 months at that point for the school taxes, but then your municipality and your state taxes, we would only collect about 6 months.
Yeah.
So it's kind of split out, but we have a system that helps determine what those actual months are. So in a refinance, usually you don't have to pay any lender fees. You do have to pay your title company fees, but the escrow is part of that, but it is split out. So you don't have to pay as much during a refinance in escrow as you do for a purchase.
Yeah.
Depending on the time of year. But again, and the title company takes care of all that. They make sure all the escrow is correct because they pull what the taxes are, and obviously they get the homeowners from whoever the insurance agent is, and that money gets put again into a new escrow, and then it's collected monthly, and then the lender is responsible for making sure that those monies are paid.
Yes.
A common thing that people forget, they always send us their tax bills. They always send us their insurance bills because they think that because they're getting their bill at the end of
the end of the year. Yeah.
End of the year or the premium. Like I know with my insurance, we get a statement because our insurance actually went up this past year, but we need to put a new roof on. So Bill keeps yelling at us about that.
Yeah.
So you get a statement. I don't need to do anything with that statement.
Yes.
Unless I want to change my stuff. And then you call your insurance agent and then they take care of the escrow. Like they don't, my husband always asks me, he's like, well, if it changes, do we have to do anything? I'm like, nope. The insurance agent gets in contact with the lender and because they have all those contacts when you settle on the house.
Correct. Yeah.
So, and you also get a tax escrow at the end of the year that tells you whether you're over or under with the taxes.
Yep.
I don't know what goes into that. There were several years where I got checks back because we overpaid in our escrow.
Yeah, it depends on the lender. I think some lenders will either pay you back, or some lenders will use that as credit towards the next following year. So they use their overage. So it really depends on the lender.
Well, they usually give you the choice. Like if
Yeah,
you have
some
overage,
of them. Yeah.
well,
Yeah.
ours did. Ours
Yeah.
gave us the choice when we went over, but the last couple of years ours was under, and we actually had
to pay
pay
extra. Yeah,
to pay
it's
extra.
not
So,
fun times. Yeah. So I'm glad you highlighted that, because a lot of people, clients of mine, always get that shock. Like, okay, I bought a house this year, then September timeframe comes through and they get a bill in the mail for the school taxes, and they're like, oh, I thought this was paid for. So yes, it is paid, but you're still always going to get a copy. So thanks for pointing that out, because
and if
people
you
do
think
freak
it's
out.
wrong, if you think it's wrong,
Yeah.
reach out to your lender.
Yes, yes.
Because I had that with a couple of mine last year, that the lender miscalculated, and then a couple customers got a big check back because they're like, why am I paying this much when I pay it? Well, here there was an error somewhere
Yeah.
in the escrow, and they overpaid, but they got a $900 some dollar check back in the mail. So, but if you think something's up with it,
Yeah.
reach out to your
Reach
lender,
out.
because the lender can reach out to the title company to find out where the discrepancy is, if
Okay.
there is a discrepancy.
Yeah, yeah.
So,
But just know that your taxes are paid for the year when you buy a house, and that's going to be part of your closing costs. But the following year, you're still always going to get a bill. So just know that that's going to be a fact. And then, but it should be paid off by your mortgage if you chose to do escrow, which a lot of the lenders nowadays, if you are financing a property, they will enforce you to do the escrow. Some of them may be flexible about it and allow you to pay it on your own if you want, but majority of them actually make it mandatory for you to escrow your taxes and your insurance, because they want to make sure it's getting paid on time and every year, correctly. So that kind of, it's very seldomly you're going to see someone financing and having the option to pay the taxes on their own. So you just know that when you buy a house, chances are you're escrowing it. The taxes are part of monthly payments, and you should know when you're going through it, your realtor and your lender will always run through all the details of your monthly payments, so you would know your taxes are built into it and how much is taken out every time. But just know you should expect that bill on the mail throughout the year, so you still see that, and you should actually expect to see that way you can keep track of it too. We do have one question, a little bit on the outside of the escrow, but since you brought up refinance, they were asking if you can use equity to refinance, and the question is, yes, it depends on the goals of how you want to use the equity, right? There's different types of refinance options, including like what we call the cash out refinance, which there's two options on those. Some banks may offer you to do what's called the home equity loan, where you can take money away from the equity of your property, but you're not necessarily for refinancing, you're just borrowing against the equity of your property. That's the home equity loan. You can also do the, what is it, HEVOC? Is that how you say it?
HELOC.
HELOC.
Well, that's a home equity line of credit.
Yeah, but that one you actually creates a line of credit.
Correct.
That you can take
Yes,
money
there's-
out.
yep.
Yeah, it's a little different because the home equity loan is an actual loan, and you get the whole lump sum of whatever you are approved for from the equity of your home. And then the HELOC becomes a line of credit that you can access
Pull so
as
much
needed.
out.
Yeah. And the rates could vary too between the line of the home equity loan and the line of credit. Sometimes the line of credit could be a variable rate, so you pay whatever is in the market, and that's what we're bringing it back to last episode. That would be one of the ones that you kind of can have to watch out to see how much you're paying on those. So that's for that kind of cash out option. Now, if you're just refinancing and you would like to refinance and also take money back, you also have that option, right?
Correct.
And then you actually get a new monthly payment for the total that you're refinancing based on the new appraised value of that property, and you getting that money back as well. But I think that would still fall under a home equity loan?
So
Or is
no,
that different?
you would do a cash out refinance. So that wouldn't be a home equity. It would just be
It would be just a new
it would be a
refinance.
cash out based on the equity in your house. So the
Mhm.
difference, the thing with the cash out refinance, you're kind of limited with your loan to value. So a lot of times it's 80% loan to value. So if your house appraises at 200,000, we can only lend up to the 80% of that, which would be one
Something.
yeah.
Don't make me do math in my
I'm not gonna
head.
do it in my head. But if you're looking to get more out, it might make sense to do the home equity line of credit because they're usually free. Yes, it is another lien on your
On
so
the
there'd be a
property.
second lien on the property, but
You can get more out of
you
it.
can get more out of it because sometimes you can do a home equity depending on the company. There's some credit unions that can go up to 100% financing.
Yeah.
So you may not have to use all of it,
But you have that option.
but you have that option.
And also another reason why maybe you might prefer doing a home equity loan or line of credit instead of a cash out refi is, let's say that was my case because I did a home equity loan myself. My mortgage itself, I had such a low interest rate for the whole price of the home that doing a cash out refi did not make sense financially because the rates were so much higher, and I would have to refinance the entire amount with the new rate, and that would be very expensive. So it made more sense to keep the current mortgage and do a home equity loan, which is a second mortgage technically, and then only that portion would be the new interest rate, and my mortgage stays intact. So sometimes you really have to talk to a loan officer to understand what makes sense financially to do, because sometimes a cash out refi might be great if the interest rates are low, but it might not be so great if the interest rates are high. So you might want to try to get other sources, or like she said, if you need more out of your equity, the cash out refi limits you at 80%, but some home equity loans, a line of credit might go all the way up to 100%. If your house now it's valued much higher, you might be able to take more advantage of that, bigger equity.
And
so
Fairway does offer home equity lines of credit.
Okay.
So we can do everything.
Awesome.
But land loans and one-time construction.
Mm-hmm.
But the Fairway's interest rates they're a little bit higher. So most likely we'd have to check the situation. I would probably refer them to a credit union.
Mm-hmm.
So I'm trying to hook up with a couple people that I was working with when I was at Sierra, and that we never got to meet because of the move.
Yeah.
So Fairway does offer them. We have a whole team that works with the customer when it comes to the home equity. So I would only do a home equity through Fairway if it made sense. Most likely they'd probably get a better interest rate through a credit union or somewhere else, and they might be able to get a little more out of it, but it is an option.
Yeah. So hopefully that answers your question, Taisha. Thanks for sending it over. Yeah. So do you have anything else in regards of the escrow, Kelly, that you wanted to bring it up today?
I don't think so. It's the basic thing is it's kind of like a short-term savings account.
Yeah, that's a good way of putting it.
You start the buying process of a home, and then it becomes a holding account, so to speak, once you settle on the house, and then the lender's responsible for taking care of your taxes and your insurance.
Yeah.
So that's pretty much sums it up on what an escrow account is.
Yeah, and the escrow account can be different accounts from different people. Like we explained, like if you have your deposit being held by the seller's broker, they're going to hold the deposit into that broker's escrow account, which is a different account than what the title company has, and of course, a different yet than the mortgage company is going to use post settlement. So they're all called escrow accounts, but that doesn't mean it's always the same account throughout the entire process. It will vary based on the needs of who is dealing with what. And then just again to remind you guys, when we say we are under escrow in the buying process, that means we are under contract. I think that's just the biggest misconception that people get confused. And then if you choose to opt into be doing escrow with a mortgage company, that means you're choosing to have your taxes and homeowners insurance built into your mortgage payments and paid for by the mortgage company. So that's what it means choosing to do escrow with the mortgage company. And then as soon as you guys understand that, I think this should be much clearer, the whole escrow
Yeah.
situation that we have in real estate. I know it can be confusing. So if you guys have any additional questions or it's still not very clear to you guys, anything that we spoke about today, please let us know. You have our information going through the bottom. You can text us, call us, email us, whatever is easier for you. We are on YouTube, social media, so you can message us directly there as well. So we're here as a resource. Even if you never worked with us, doesn't matter. We are here to help you. So please feel free to call us if you have any questions at all. Anything else?
I don't think so.
I love that we are together. Look at that.
I know.
I love that. So yeah, so that's all we have for today. We're right on the right time there. Like I said, just reach out to us if you have questions, and have an amazing day, guys. I'll see you next week. 10:30 on Monday. If not, we will let you guys know. We changed it this week, so sorry about the changes, but next Monday at 10:30. See you guys. Bye.
Bye.